FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. The date is March 16th, 2016. We've seen a run-up in gold, best performing asset class so far in 2016. Although happy days appear to be here again on Wall Street. Will they stay? That's the question. We all have our opinions about that one. But point is, gold, silver, are they getting ready for a breakout, a real breakout? Little pullback then wouldn't be unhealthy, would it? Here to discuss it and to further educate us is Ned Schmidt. You know him well from the Value View Gold Report and the Agri-Food Value View newsletter. He's been doing this a long time. Ned, you're one of the most knowledgeable people about commodities, agricultural commodities out there. So welcome back as always.
Yeah, it's good to see you this morning, Kerry.
Hey, so everything's coming up Trump, and is that going to make any difference in the scheme of things?
Well, I have to remember that whoever's elected don't even take office till the third week of January of next year. And any single president doesn't change anything in the first 2, 3, 4 months of his office anyhow. So right now, there ought to be some optimism, because the policies of Barack Obama, whoever is elected president, especially as Trump, are no longer going to be doing damage to the economy. Yeah. Barack Obama has the footnote in history of being the only president that never achieved 3% growth in the United States economy. Never. The only one in history. So things are going to be better next year, I think. Right now, the psychology is negative on Trump from an investor standpoint. For some reason, investors are afraid of Trump. I don't know why that's true, but that's their opinion. But with that as a little bit of a background, the markets are basically being driven by other factors. And so Trump or Obama or Clinton is not yet having an impact on markets. What's going on is pure market-driven activity last year. And I keep going back to the summer of 2015 when the world changed. Gold was more undervalued, the most undervalued it had been relative to stocks since 2007 through 9 in that era when gold was $800. Mm-hmm. And so we had a historic undervaluation of gold last year. In the end of last year, and it is still undervalued relative to equities that we haven't seen in a decade. And so it was poised to rise simply because of exhaustion. I mean, you couldn't get it any cheaper. And then when the stock market broke last year, and anybody that doesn't think the U.S. stock market is seriously broke is missing out what's going on there. The infrastructure problems in the U.S. stock market will really start to hit in April when the layoffs begin in the hedge fund industry. And so gold was poised, and it just took something that we don't even know what was for it to turn. And I hate to talk Elliott Wave theory on the radio.
Hey, this is a family show here. You can't talk about that.
I'm sorry, but gold has been in a bear market for essentially 4 years.
Yeah.
That completed wave 2, and even bearish technicians now can't look at gold and ignore the breakout we've recently had. And investors flow to positive returns. I mean, in the last year, gold is up 7%, the S&P is down 2%, and Apple is not going to be a $1 trillion company, and neither is Facebook. And so gold is the winning asset. The other and perhaps more important thing is the dollar is broken. I mean, the dollar rally, which was about a 2-year thing, it ended in January. I mean, you can go look at any currency chart, and you will see just about a bottom in those foreign currencies. The most obvious one is the Russian ruble, which 2-3 months ago was trading at 82 to the dollar.
Mm-hmm.
So it took 82 of them to buy a dollar.
Right.
It recently broke 70 to the dollar.
Mm-hmm.
And you see it across the board. Even the Brazilian real has rallied. Argentine peso has rallied. Malaysia, Singapore. The Japanese yen was supposed to go to 120. It hasn't on negative interest rates. The euro, Goldman still sticks with his 95-cent forecast for the euro, is trading at $1.10.
Mm.
These currencies are broke. Now, why would that happen? Well, once you get to negative interest rates, let's say that Europe, I guess, is at -0.5%. How far are you going? Are you going to keep lowering them? Are we going to go to -2%, -4%, -6%?
And they'll just take all your money, put it in the bank, and they just steal it, kind of like that South Park cartoon where he puts his $100 in the bank, and the bank officer says, "Oh, we'll invest it in some high-yielding debt swaps," and then it's gone. He says, "What happened to my $100? No, it's gone." And it says, "Get out of here. This is only for customers of the bank. You're not a customer. Leave."
We took all your money.
Yeah.
Anyhow, the point being that once you're down in negative interest rates, we know that ultimately they're going up. If you look at all of history, negative interest rates have not been the norm all the way back to Babylon. And so
Can't be.
you don't know when European rates are going to go up, but they're going to go up. So are the Japanese.
Mm-hmm.
And so this fantasy world is broken.
Yeah.
And once you turn an asset, I don't care what it is, stocks, bonds, baseball cards, artwork, whatever, once you turn the trend stays turned. And so gold is one of the three major asset classes. And it is not going to go away, and people are going to buy more of it. That's obvious in the physical market. So we're in the beginning of what we would call a wave 3. And the first leg of that should carry at least to the high we had recently, like 4 years ago. So I think we're going to hit 19 to 2100 on gold in the first part of 2017. Now, there's a warning with this. It is not going to go like a straight line. Markets go up and down. It's like this week. We're playing Federal Reserve interest rate games again. They sold dollars, they sold gold, rallied the dollar. We do that every time we have a Federal Reserve meeting. So this sell-off connected to the Federal Reserve is setting up an excellent opportunity for investors to get in to some more gold perhaps next week. Monday through Wednesday of next week looks like a good time. And while the gold stock ETFs have already screamed quite a bit, it's time to start looking at some of these gold stocks that you have not looked at in years. And the one I've been talking about recently is Newmont, NEM. If you pull up a 5-year chart on this stock, it went from 70 to below 20. Long slide. But it's been in a base for almost 3 years. Something that's built a 3-year base after a slide is probably one of the best opportunities there are. Mm-hmm. And if that stock goes above 29, you're going to see it go to 40. And that is just the snapback to normal, because what we're not seeing yet is higher gold prices flow through the revenue statements. By the reports on the second quarter, which will hit in September, we will start seeing positive surprises in the earnings reports of some of these companies. So,
well, they've cut to the bone, right? They've written off everything but the kitchen sink, and some of them have even done that. So
that's right.
The least bit upside to their earnings is going to be enormous, because the leverage, when you lower your costs of doing business, then the leverage of each incremental dollar of revenue is far greater than if it's just during an expansion where you haven't cut your costs, where your costs are rising.
That's exactly right. You've got this operating leverage and financial leverage that's going to kick in, and you're going to see some good earnings. Now, the other thing we haven't been talking about much lately because all attentions are turned to the U.S. election. But Kerry, I recently read a book. Let me give you the name of it.
Yeah.
The Last War of the World Island.
The Last War. Okay.
Last War of the World Island, the Geopolitics of Contemporary Russia. And it's written by a guy named Alexander Dugin, D-U-G-I-N, who is a Russian academic, a Russian nationalist, a Russian patriot, and he has consulted with Putin. He wrote this book in Russian in 2012. It came out in the English version in 2015, and it talks about foreign policy for Russia. And if anybody thinks Putin's going to go quietly into the night, you're sadly mistaken. I know we've been paying attention to our election, but this is a book that people have to read, and you will see where Putin's going on this. And he's just beginning to build the border around Russia, and it's just the beginning there. So, want to scare yourself a little bit, that's a book to read.
Yeah, well, Trump's going to get along well with Putin, so we don't have anything to worry about, right?
Well, I think they will. You know, Nixon had a good relations with the Russians because they knew he was a bastard. And, you know, so they tend to get along with people like that. You know, one gangster always seems to get along with another gangster.
For sure. And even though Bush, the last Bush, was much maligned, W. The fact was the guy spent most of his time in college playing poker. And I think poker is the best training ground to become a political leader that there is, because you don't always have a good hand, but you're going to have to project it. Sometimes you have a really good hand and you want to hide it because it's to your advantage. Poker skills, and it's all about deceit poker. Right? Poker's if you're a great poker player, you're a great deceiver. And what better skill for a politician to have here, Ned?
That's true. That's true. And you know, Trump is whatever they say about the man, he's a negotiator. Mm-hmm. There's probably nobody sat down across the table with more politicians, more contractors, more union bosses to get a building done. I mean, most of us don't understand what it takes to build
in Manhattan,
giant hotel.
Oh God, in Manhattan, you can't even imagine. You've never, just living there my life. I just watch stuff, and you could fight over a one lot for 20 years. They could be fighting over the thing, but he just had the unique capability of cutting through all the BS and getting the job done. People you really don't know. You got unions, they got their hands out, they're all on the take. And then you've got politicians, and then you got environmental wackos and neighborhood activists, and it's just a real mixture that you need unbelievable skills to handle. And all those people are trying to rip you off at the same time, right?
Right.
So I think those skills will figure prominently, and I do believe he's going to win because I just think the country is just to a point where it's desperation almost,
I think you're right. I mean, the academics and the journalists talk about this problem with people's incomes not going up, but it's real. Yeah. I mean, the average income of families in this country has stagnated for 8 years.
Even longer than that, but arguably at least 8, yes. I mean, we could go back and kind of debate that, but certainly it's gone backwards over the last 8 years, right? It's
That's true.
Declined. So
yeah.
So agriculture. You told this story that you said it oftentimes that corn will be worth more than apples, and you told the story of some young Turk from Wall Street. You said that too a while ago.
No, I had lunch with some. I was at a luncheon, and my table was 3 or 4 young portfolio managers under 30, and I told them, this was in May of last year. I told them the corn would outperform apples. And they thought I was old, gray, and senile. But in fact, it has been. I mean, a bushel of corn has done better than Apple stock. I'm sorry, all you Wall Street experts, but it didn't. Now, what's going on is two things right now. They're starting to roll agriculture forward. First, you got to remember that in terms of non-U.S. dollar consumers, the average consumer that doesn't live in dollars, food prices went to an all-time high in January.
Oh, Canadians are paying $8 for a cauliflower, my friend was telling me, the webmaster of Financial Survival Network. He's paid $8 for cauliflower.
I wouldn't pay $8 for a cauliflower.
I like it, but not enough.
I don't like cauliflower. but the dollar has turned, and that's starting to have an impact. So as the dollar becomes less of a problem, our prices go up. Our exports, U.S. exports, have been crushed this past year by the dollar.
Yeah.
The price of oil has bottomed. Now, I'm not looking for oil to go to $60 or anything like that, but just not going down, because the price of oil has a big impact on the price of soybeans, canola, and palm oil, because they are all used to make biofuels. Mm-hmm. And so that is putting a bottom under that. Soybeans, which this is going to be the decade of the soybean, because it is far more versatile than corn. Most of us think of soy sauce, but that's not it. It's used from everything from cattle feed to vegetable oil to make plastics. The uses for the soybean are monumental, and you can only grow it in certain parts of the world. It grows in a band, say through Illinois, all the way around the world, and that's because only in that climate can the soybean have sex. So that's just a reality of it.
Okay. All right. And remember, this is a family show, but okay.
But so we're situated very good there, and there's some situations developing that all it takes is not a negative background. Syngenta, the buyout of Syngenta starts next week on the 23rd. $49 billion of cash coming in to people that own Syngenta. So a year ago, people owned Monsanto and Syngenta. So now their Syngenta position is getting cashed out. What are they going to do with the money? Well, they're going to put some of it in Monsanto. They're going to put a lot of it in FMC. And FMC is going to be the number 2 choice among investors in that sector of seeds and crop protection. Mm-hmm. And then we're going to have later this year, I think, we're going to have DuPont Ag. But that money is going to flow into FMC and then into DuPont. So those are good opportunities, FMC especially.
I see.
Deere and AGCO, the numbers on farm machinery look horrible, but December was probably the bottom in bad numbers. In January, U.S. combine sales were up 24% from a year ago. So what we're going to see as we go forward in this year is the companies are more likely to be raising their outlook on farm machinery. It's not going to be robust like it was a few years ago with $8 corn, but the bottom's in place. And so AGCO is my preferred choice. So I think you can take a look right now at FMC in particular, DuPont Ag when it comes out, and then AGCO. Mm-hmm. So there's some opportunities there that don't need a euphoric background in ag prices to do well.
I see.
And the stocks have been outperforming the market since July of last year.
Mm-hmm. Interesting. So we got things happening here, and you're most bullish on precious metal, I see. Precious metals. Silver going to come back soon?
Silver is just plain baffling. Silver relative to gold has only been this cheap one other time in the last 20 years. And I think what it's saying is the street does not believe the gold rally. They don't believe the gold rally. They don't believe silver at all. So silver is like a compressed spring waiting to catch up. Part of its problem, and part of gold's problem, is the massive selling by commercials. The commercials have been strong sales. They're in gold and silver. Their net short position is probably as high as it's been in 3 years. And so that's the compression and the fact that the street is not a believer. And once we get gold to 13, if it breaks 1,300, which it will, I think you're going to see silver start to make its move.
Mm-hmm.
But I'll admit it's been frustrating on silver.
Yeah, I am inclined to agree. I'm guardedly optimistic on the metals, but I want to see 1,300. To me, 1,300, it's not a technical number by any stretch. Really, 1,263 was the technical number. So if you're a technician, you should be rejoicing. But fact of the matter is, when it hits 1,300, that seems to be real. And I think that's the number when things start to happen.
I can't argue with that. And I think what it would do is the bears have to capitulate then. If you're still around with a forecast of $1,000 on gold or 900, and it's trading at 1,300, even Goldman Sachs analysts are going to change their mind.
Mm-hmm. Yeah, I think you're right. Well, on that note, find Ned's work, his two august publications. Why don't you tell us what they are, Ned?
You can find my gold work at ValueViewGoldReport.com. The other site is AgraFoodValueView.com.
All right.
And it's always fun, Kerry.
Hey, likewise. And as always, there'll be a link to those sites so you can check them out. Subscribe if you like. And starting to get interesting, Ned. And we'll talk to you in a little bit. And keep our fingers crossed over gold 1,300.
All right, I will. Have a good week, Kerry.
You too.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.